Good evening. Ira Epstein, and here we are with your metal market update. And this update is for the evening of Wednesday, the 12th of April, 2023. I'm so sorry I couldn't do the update last night. I actually did it, believe it or not. By the way, it's 6 p.m. as we're doing this. I did it. The voice didn't come out. My fault. I hit a wrong button. I saw what I did, and I couldn't believe I did that. It recorded all of them. What was the point of putting them up without it? By the time I was finished, it was 8 o'clock. This is the time frame where I go see all my doctors every year, every single year. And the reason is, why not? I mean, you go to a doctor visit, for, be it your eyes, be it your skin, be it your GP, and I just do it. And as you get older, you take care of yourself, you catch things, and you're fine. I'll be here forever, okay? I really believe that. I'll die at my desk eventually. I love working. There's probably a few people that like to work as much as I do. It's my hobby, and I happen to get paid to do it. So where are we in these metals? Well, I'm a little concerned about gold in the sense that everybody says you got to buy gold, it's going to keep running. When I see a trade get crowded, the hair on the back of my neck, and I have a lot of hair, starts standing up. I'm going, okay, that might be okay, but maybe it isn't okay. It's back and forth. The CPI numbers today, there's nothing in those numbers at all to stop the Fed from a quarter-point hike. I think it's baked in. I think it's a done deal. And if these numbers came this way out again, I think they do it possibly in June. And I realize people are saying, Ira, they're going to stop at some point. They have to. And I'm going to go, why? They have two mandates. What are they? Full employment, which they have at 3.5%, and they've got to control inflation. They haven't beaten inflation. Headline inflation, admittedly, has gone down from 9.1% to 5%. That's a big decline. But now you get to the sticky stuff. And I have been adamant telling you, you're going to get to the point where the low-hanging fruit, you can't grab it easy. And you're there. Rent, shelter, big items, all right? I walk around, I'm looking at what's going on. You want to rent a nice apartment in Chicago? It's expensive. End of discussion. And the new buildings that are going up, they're not offering great deals. They got to cover their costs and so on. And people want to move into them because there's not a lot of homes to buy. I called my broker about that. What about the homes? And we went through a whole dissertation on it, okay? She had a bunch of deals collapse on her. Collapse. I think I said this last night and it didn't make it because no voice. But she had 5 deals, and she's one of the top brokers in the area of the city that I live in, which is the hot area right now. And she said, Ira, at 3.8%, everybody was grabbing. If it's on the market, just get it, all right, because it's going to get away from me. Now at a 6.3% mortgage, and that's what you have on a conventional 30-year, people are going, well, it's 2.5 percentage points more. Well, what they're not understanding, there's no product out there. So if you don't grab it now, you got the same problem. I know you may not believe that. Yes, it changes. Hot markets, Florida, one thing. Florida will go through a cycle. You will hear a year or two from now, boom, it's gone like that. California is already experiencing it. Phoenix is already experiencing it. It's the way real estate cycles go. The nice thing about Chicago, it never goes that high. It never goes down that much. It's just a steady movement in the pricing, okay? And that's because we don't have the influx of foreign capital coming into the center of the city. That's what I've always said. The beauty is with climate change, we'll have palm trees here and you're all going to want to live here eventually. Okay. So when we come to the gold market, well, you're still up 0.18% for the week, you're midweek. When you look at the chart, you really haven't gone anywhere in a while. You peaked out up here at the 2050 zone. You've backed in. You're at 2030 right now on the dailies. You have the trend up, the bias up. You're over the 18-day average. I think that traders are going to look hard at that 2002 level if the market should pull back there. But I don't see the need to rush out and buy a Bollinger Band. What's going to make that happen? You need a shock, in my opinion, to really get over that price very easily right here, and you're overbought. So I realize you're in an uptrend, the bias is up, but you're overbought. That generally doesn't attract new capital. When I look at the gold-silver ratio, silver is where you want to be. It has the advantage of if you want to own a cheap metal that got some inflation play and an industrial metal for solar and all those others, you have it. That's where you're at. And you have the embedded reading. This is the one, to me, that is the strongest. When we come to the copper market, the market is just a hard one right here. It's whipping back and forth either side of the 18-day average. It's not going to the upper band. It's not going to the lower Bollinger Band. It's just hanging right here. The market needs China to come alive. And tonight we're going to finally get some news out of China. What does their import exports look like? What's the economy doing? Maybe that'll be the catalyst, but people smarter than I am probably have that number, and you're not moving very much tonight. So that's one thing I look at. In the platinum market, you're up at the upper Bollinger Band and overbought. What do I think the pros are doing? I think they're taking money off the table. Bye-bye, Miss American Pie. And I think they'll wait and see what it does from there. In the palladium market, you have an uptrend, flat momentum, but still more bullish. Maybe you make it up there. You don't want to see it get back under here, the 1402 level. Barring that, it still looks okay on the upside. In the dollar, I am the bear. All right. You know, I did a special report in the dollar recently, bearish. Don't mind saying that to you. And all cylinders. I think the market, if it hits 101.04, probably going to see some short covering, but I think you're going even lower in this. Why? Because I think other economies, be it the Brits, be it Europe and the Union, they're going to have to do higher rates. We're seeing some countries already stalling. Canada stalled today. They didn't raise their interest rate. They stayed again at 4.5%. I think you can see Australia doesn't want to raise rates. I was surprised New Zealand did it, but I think the European Union, they're going. And this play that they're getting off of, unfortunately, OPEC, sticking it to them, away you go. It was pretty interesting how poorly Mr. Macron today thought of the United States and all the things that he's saying. As usual, he should have spoken to his allies in the U.S. to let it know. Did we deserve it? You betcha. You heard what I just said. You betcha. Should have just been done behind closed doors. We have been no friend to a lot of people under both Trump and Biden. Remember that. This America first didn't help anybody. Then the different things that Biden has done. What about the release of these spy papers? Whoa. Now, I want to remind everybody here that we've got the webinar. If you want to attend my webinar, which I'd love for you to be doing, that's going to be tomorrow. So at 12:15 on Thursday, I will open up my webinar. I'll begin it at 12:30 p.m. Central Time. If you haven't gotten an invite, you're not on my mailing list. All you need to do is move your cursor up here. You'll see an icon. Give it a click. Fill out everything. If you want me to cover stocks or ETFs of any type, just write me the questions. You can ask live all the questions on futures because I have all the charts already done. But when you're dealing with stocks and ETFs, there's thousands upon thousands, and I like to get the chart set up with window envelopes ahead of time. I hope you come. I'm Ira Epstein. You have a good day.